It's Wednesday, February 21st, 2024. I want to thank everybody for tuning in today. Please make sure to like, share, and subscribe. I want to get right into this video today. And please comment down below. I want to hear your thoughts on all of this. The first article coming from CNBC, Fed officials express caution about lowering rates too quickly at last meeting minutes show. So we had the Fed minutes today. And very, very interesting. It was not really, I didn't think it was very positive for the markets, but the markets seem to be ignoring anything now that the Fed says. It continues to ignore reality. It just continues to hope for the Fed to cut rates. But the Dow Jones at one point was down around 200 points today. It closed up 48 points. The 10-year bond yield at 4.315. So we watched a miracle take place again on Wall Street today. I think from the news that we got from the Fed minutes today that the markets should have really gotten clobbered, and they did not. But policymakers have decided that no cuts would be coming until the rate-setting Federal Open Markets Committee held greater confidence that inflation is receding. Why with the markets like this? What caused the markets to turn around, being 200 down and the Dow Jones closing up 48? Officials stated they wanted to see more before starting to ease policy, while saying rate hikes are likely over. Now, Larry Summers has come out to say that, and many other people have too, that he doesn't expect to even see rate cuts this year. In fact, we could see rate hikes this year. Many people have been saying that. There is a real possibility that we do not see any rate cuts, that we do see maybe another rate hike or a couple rate hikes this year. It's very, very possible, ladies and gentlemen, because how in the world can the Fed at this point justify where we're at right now of cutting rates? And remember, we heard all this hearsay that they were going to cut in January, then they were going to cut in March, then they were going to cut in May, and now maybe they're going to cut in June. So everything we've been told has not happened, and I believe they are going to hold higher for longer, and I would not be shocked if we get another rate hike this year. Comment down below. Let me know what you think. Are they going to hold higher for longer? Are we going to get another hike, or will they begin cutting at some point June, July, somewhere this summer? And remember, when they do cut, there's about a 12 to 18 month time period before we get any reaction or any indication of what these cuts are going to do. It's about a 12 to 18 month delay. So if they cut tomorrow, we're not going to see anything for a year or a year and a half in regards to the cut. But I think that rate cuts, honestly, are becoming more and more unlikely. Let me know your thoughts. I was reading this article today. Fed will be forced to raise rates to defend the dollar. Bill Holter, who I consider a friend. We had the honor to meet and spend some time with him last summer, and look forward to seeing him again this summer. But Holter is taking the other side here. He said, if you look at the amount of debt service the federal government is paying, it's over $1 trillion a year. That's going to go to 1.5 trillion and then to 2 trillion in interest a year. There is no deterioration of credit in the rates themselves. He says, I foresee the day, and it may be within the next year, that the Fed is forced to raise interest rates to defend the dollar. That's a problem, he says. You have bad credit with the country who issues the world reserve currency. If all of a sudden the dollar falls apart, how does evil get paid to perform? How do we fight wars? You know, several years ago, and I remember this vividly because I've been watching Bill for many, many years, have a lot of respect for Bill, but he envisioned a Mad Max scenario unfolding because of all of this debt, the exploding debt, debt that can never be paid back. And people laughed. People said it's impossible. Ladies and gentlemen, nobody's laughing today. If they are, they're just drinking the Kool-Aid. But most people at this point are not laughing because they know that this is very, very possible. They're watching these things unfold before their very eyes right now. Anybody laughing at this is very, very ignorant, because we are now watching this unfold and knocking at our door. So I advise that all of you continue to prepare, get out of the system, make sure you own assets, make sure you own real things, make sure you own some gold. Here's another one from CNBC today. Mortgage demand takes massive hit as interest rates cross back over 7%. I just checked bankrate.com about an hour ago, and a 30-year fixed rate is sitting at 7.29%. I remember talking to a lender in the South over the summer, last summer, and he was adamant that we would see rates back to 4.5% by the end of last summer. Again, when you talk to people in the industry, mortgage, banking, these lenders, real estate agents, be very, very careful. I mean, hope only goes so far. And I knew that that was never going to happen, just like we're never going to see 3% or 2.65% mortgage rates ever again. But a lot of these people will tell you it's a great time to buy. You can refi when rates go back under 3%. Don't listen to these people. They're going to get you in very, very big trouble. Applications to purchase a home fell 10% for the week. And those applications are down 13% lower than the same week a year ago. We have now a housing crisis on our hands, ladies and gentlemen. Yes, people can tell me how much a house costs, but I'm going to tell you that it's not selling, that homes are staying days on the market much, much longer, that there is a much smaller pool of qualified buyers that can buy these homes. And many, many of these sellers are going to get themselves in very, very big trouble. Mortgage demand is taking a massive hit. You have builders building lots of homes. You have landlords getting out of the business. You have short-term renters that own these homes, rental owners who own these homes, Airbnb, VRBO, they're going to be dumping these homes. And the market is going to be flooded with homes. Problem is, who's going to buy them? Maybe it's going to be institutional investors. I don't know. But it's not going to be the average consumer anymore because their credit is being destroyed. And if you don't have cash, which is most consumers, you need to finance. Just like you have to finance a car, just like people are financing their groceries, they're financing their electric bill. If you don't have credit, you can't borrow money. You're going to be in trouble. And so you're not going to be able to buy a house. And now we're watching people take out adjustable rate mortgages again. That number is going up, and that is extremely risky because you have to ask yourself, what if the Fed doesn't cut this year? What if they begin to raise again? What if they have to raise next year? What if they cut once or twice and then begin to raise again? There's no guarantee of any cuts, ladies and gentlemen. Mortgage rates could go much higher. 7.29% for a 30-year right now. It could go to 8. It could go to 9. It could go to 10. We don't know. Nobody has a crystal ball. But I can tell you what, people are gambling. Adjustable rate mortgages, extremely dangerous. A lot of people got very, very burned in the '08 crisis because of this. Number one reason Americans get denied for a mortgage, guess what it is? Of course, you guessed it, it's debt. Guess what people are taking on more of? You guessed it, they're taking on more debt. The pool of qualified buyers is shrinking, ladies and gentlemen. People are taking on more debt than ever just to survive, just to pay the bills. And where are the home buyers going to come from when they have too much debt, when their credit's being destroyed? Here's another one today. CNBC, the presidential administration to forgive $1.2 billion in student debt for over 150,000 borrowers. How do you feel about this? This to me, really, it really irritates me. It really, really does. The relief will go to borrowers who have been in repayment for a decade or longer and originally took out $12,000 or less. Now, I've got to ask the question. You went to college, you got a degree, you got $10,000 or $12,000 of debt, and you could not pay it back in a decade? What have you been doing? You could not pay back $12,000 or less in a decade, and you went to college? What is going on here? But the taxpayer is now on the hook to pay this money. How do you feel about this? I feel like I'm being robbed. I'm being ripped off, that people signed on the dotted line, made an obligation, shook hands, made a promise, committed, and then reneged on this obligation and now handed it off to us to pay for. Unbelievable. I mean, if you could not pay back $12,000 or less in a decade and you went to college, what was the point of all this? And yet we're all going to pay for this. Comment down below. I don't like it one bit at all. I think it's horrible when people are obligated to pay other people's bills. It's disgusting. And this should be criminal. Restaurant owners warn new California law will make menu prices skyrocket, crippling to everybody. This on Fox Business. Last October, a new California law was signed. It will ban junk fees across a variety of businesses, including restaurants, and some warn that customers and restaurants will be shocked at the rise in prices. Again, this is just unbelievable what's going on. Restaurant owners have relied, it says here, on surcharges to provide their employee benefits like healthcare. Now, they're just going to raise prices of your breakfast, lunch, and dinner to pay for these benefits. This is going to put, this is going to put a lot of pressure on businesses, especially restaurants. Just talked about this yesterday or the day before, how difficult it is to run a business. But, why should we be paying surcharges to begin with? Okay, so now they can't use these surcharges, so they're going to have to pay for these benefits out of pocket. How do they do that? They're going to raise prices of your meal. And so now it's going to be a little more obvious when people look at the price on the menu that things, went from maybe, $30 to $40. That's a big hike. But I guess it was maybe more easily hidden by putting surcharges in there, and people kind of ignored it or didn't look at it. But this is going to be another problem for small businesses and restaurants right here in California. And this one right here, no Grand Slam. Denny's CFO breaks his silence on 57 closures in last year and admits chain will be forced to shut down more locations. This coming from the U.S. Sun. 57 Denny's closed last year. And I went to, I had to bring this up because we went to Denny's yesterday for a late breakfast. And we have a brand new Denny's about a mile and a half from the house here. And we decided to just grab some breakfast late yesterday. And I had a Grand Slam, and it was $14.59. And I remember many, many years ago when a Grand Slam was $1.99. And then I think they brought it back, and it was $4.99 or $5.99. Yesterday, 2 Grand Slams, $14.59 each. The bill was over $30 just to go to Denny's and have a Grand Slam. That used to cost $1.99 each. That would have cost me back in the day $5 for the both of us. Unbelievable. And now it's going to go up. It's going to go up because of this whole surcharge situation. Businessmen say they will no longer invest in New York after Justice Engoron's ruling. We're watching the self-destruction yet again of another economy, another city, another state. Absolutely disturbing. They cannot run businesses out of New York fast enough. They cannot run businesses out of California fast enough. Mr. Wonderful, Kevin O'Leary, said yesterday, California is a loser state. New York is a loser state. He's not going to do any business in my state here or New York. I don't blame him. And we're going to continue to watch the destruction of these states. Thanks to Justice Engoron and people like him, and destroying these once beautiful cities. The Daily Mail. Chicago and slam Mayor Johnson for replacing them with migrants. And this is the black population of Chicago shouting this out, that they're being replaced by migrants. And I don't blame them one bit at all. Growing up in Chicago, look, there's poverty in all cities. And look, there's poor black people, poor white people, poor Hispanic people, poor Asian people. And really, anyone in Chicago should be in an uproar with what's going on. But, there are black people in Chicago who need help. No doubt about it. There's a lot of people, white, black, Hispanic, Asian, you name it, that need help. But the black population in Chicago now is raising up and sounding the alarm and raising their voices to what's going on. God bless them for doing this. And they're angry, and they should be very, very angry. You know, these people have been in Chicago for many, many years, many of them generational, and they're not getting any help. Nobody's dealing with the gangs. Nobody's dealing with the infrastructure, the graffiti, the potholes, the food insecurity. And thank God that some of the black people in Chicago are raising their voices and demanding some accountability here. And man, the politicians in Chicago should be absolutely ashamed of themselves. And I hope the black population keeps the foot on the pedal here and keeps sounding the alarm and keeps getting louder and louder with what's happening in Chicago. Why should these people coming from all over the world get money and a break when people who've been there for 100 years, their family, still struggling, not getting a break, not getting any help whatsoever? Comment down below. Here's another one from The Hedge today. Gamification of trading apps creates rise of teen stock traders. No wonder we have so many unhealthy young people mentally and physically, because they sit behind a computer all day. They sit behind their phones all day, texting, gaming, and now trading stocks. A study from Fidelity Investments reveals more than half of the respondents, 13 to 17-year-olds, received a smartphone around the age of 10. Right there, that's a disservice to your kid, in my opinion, giving your kid a smartphone at the age of 10. By 11, they spoke to their parents about opening up a brokerage or a checking account. They want younger and younger people in the system, ladies and gentlemen. They want to hook people as young as they can. They want to get them addicted as young as they can to the phones, to trading now like it's a game. It's gambling, ladies and gentlemen. Western society is turning out even younger, degenerate gamblers than ever before through the gamification of stock trading apps on smartphones. You know, maybe these kids should be outside, you know, getting fresh air, getting some exercise, riding bikes, throwing a baseball, playing some basketball, some type of athletic activity, instead of, you know, sitting all hunched over all day looking at their phones. Really, really sad. And look, this is pure gambling. The stock market today is gambling. Nobody's buying going, oh, I'm really hoping I'm going to have these stocks to retire on in 40 years. No, everybody's trying to roll over and make a quick buck as fast as they can. And now you're passing this greed on to kids, little kids, because you're turning investing into gambling, a game now. That's all it is. Nobody's going, oh, I'm going to buy this company because this company is going to be here in 50 years. I believe in the product. I believe in the management. I believe in the CEO. I believe what they stand for. No, I want to buy something that is make-believe, and hopefully next week it goes double in price. If I spend $1,000, maybe next month it'll be worth $10,000, or next year it'll be worth $10,000, whatever. This is not investing. This is gambling. Nobody's going, oh, I'm going to buy Bitcoin because when I retire in 20 years, I'm going to cash it all in. No. People are buying Bitcoin because it's literally like a Ponzi scheme, that if everybody keeps buying it, your Bitcoin keeps going up. And if you tell your friends and your family to keep buying it, your Bitcoin keeps going up. If everybody does that, the Bitcoin just keeps going up, right? Nobody's buying it going, wow, this is wealth preservation. This is going to protect me in the worst times. No, this is gambling. This is pure gambling. If I buy it today, hopefully it's going to double in a very short period of time. There's nothing behind it. Is it an asset? Is it a currency? It is a gamble. It is a roll of the dice. And now they're trying to hook all these kids, 10, 11, 12, 13 years old, into gambling. Unbelievable. How low will they go, ladies and gentlemen? Dozens of major companies say 2024 will be the year of cost cutting. This on The Hedge today. This means more job losses and less pay. You know, people are going to get desperate, and when they try to get a job, these jobs are going to begin to pay less. You're going to get less hours. You're going to get less pay. People will also be competing against people from other countries. They're going to be competing against people from this country who are retired because they've got to go back to work. Think about how hard it's going to be to get a job at some point. And yeah, we can say, yeah, there's 8.9 million jobs available out there, but so many people are being ghosted that how many of those jobs are even real? I've had people write me saying they've filled out online over 200 applications and none of these companies get back. They're being ghosted. How much of this data that we're being fed is fake? Oh, 9 million job openings, unemployment 3.7, inflation, 3.2, whatever it is. It's all a bunch of bunk, ladies and gentlemen. They can tell you whatever number they want. At some point, maybe they'll just tell us that inflation, tomorrow is 2%. Even though you go to the grocery store and you're paying 30% more than you were a year or two ago, right? But they'll tell you it's 2%, and everybody will go, well, the government told us it's 2%, so it has to be 2%, even though all my food, all the services I pay for continue to go up, and they're up much, much more than they were 2 or 3 years ago. But if you tell somebody enough, if you tell them a lie enough times, they begin to believe it. Welcome to the new world, ladies and gentlemen. Welcome to the new world. Here we are. I'm going to wrap it up on that note right there. Please comment down below. Love to know your thoughts, where this is all going. It's a complete disaster. I think we just saw the plunge protection team in action today. They are doing whatever they can not to rattle these markets while they don't want to cut interest rates. The Fed knows if they cut rates, it could be a disaster. It's too early. We're not near 2%. And they've got to know that the data is not accurate, that it's very, very manipulated. And if they act too soon and inflation begins to roll out of control again, and then they have to raise rates after they just cut, it's going to be a disaster. They're going to be very, very reluctant. I would not be shocked if we get 0 cuts this year. I would not be shocked if we got 1 or 2 hikes this year. That's how I see it. Comment down below. Let me know your thoughts. Look, doesn't mean it's going to happen. I don't have a crystal ball. I'm not one of these people who can walk around and tell you that, this is what's going to happen. That's what's going to happen. I don't have a crystal ball. I'm just looking and reading the data like many of you, and I'm drawing a conclusion. I don't see how they're going to be able to do it. And I don't see how the U.S. economy is going to be able to recover. I don't see how they're going to stop people losing their jobs at the volume that we're watching every day now. It's really scary to watch how many jobs we're losing a day. I don't know how they're going to stop that bleeding. They're not. They're going to let it happen. This is going to be done on purpose. The Fed knows in order to get things under control, people are going to lose their jobs. They're going to have to crash the housing market. They're going to have to crash the stock market. Rates have to go way up. But you know what? Think about it. It's the only way a first-time home buyer or somebody in the middle class could actually buy a house is if you raise rates high enough and crash these markets and get prices back down to reality, back to earth. Unfortunately, a lot of people won't have a job when that day comes. Do what you can to keep your job. I would be saving as much capital as I could right now. There's no doubt sales are coming. I would be working on my skills. I would continue to be working on my security, because you're going to see a lot of hungry people in America, ladies and gentlemen, and they may be knocking at your door one day. And as I've said in the past, we all resort back to our training. And most people, since they have no training, are going to resort back to what they have, no training. And that means you'll be giving your food, your water, your assets, maybe your life to somebody you don't even know, because they're just going to take it from you. Be safe. Be careful. Be training. God bless all of you. It's a sad state of affairs, ladies and gentlemen. It's a sad state of affairs. God bless.